All right, let's just dive right into this explainer. We're going to tackle a hypothetical that I know has crossed your mind at least once. What if we could just print our way out of poverty? We're going to start off by imagining the absolute ultimate financial fantasy, a scenario where literally all your daily money problems completely disappear. Imagine waking up tomorrow morning, you casually check your banking app, and boom, there's a brand new deposit. $1 million sitting right there in your account. But here's the catch, right? Every single American just received that exact same deposit overnight.
Sounds like an absolute dream, doesn't it? I mean, think about it for a second. No more bills to stress over, no more end of the month financial anxiety. Everyone is just a millionaire overnight. It feels like the ultimate hack to wipe out economic hardship forever. But what if I told you this seemingly magical fix would actually end up making almost everyone way, way poorer? Yeah, I know, it sounds totally backward, but stick with me here as we break this down.
So let's move into section 1, the $1 million dream and the explosion of demand.
Okay, picture this scene. Everyone is suddenly flush with cash, right? We're all rushing out to buy homes, new cars, the latest tech. Demand absolutely explodes. But here's the massive underlying reality check. The actual number of houses built, cars sitting on the lot, and food on the grocery store shelves hasn't changed at all, not by a single unit. So now you've got millions of newly minted millionaires all vigorously competing for the exact same severely limited supply of physical goods.
Which brings us to section 2, the reality of inflation and the price shock. Look, businesses aren't oblivious. They realize instantly that consumer demand has gone through the roof. And because so many people are bidding on the exact same limited inventory, well, sellers naturally raise their asking prices. I mean, a beautiful house that used to go for, say, $500,000, that might suddenly get listed for $5 million. The physical house itself hasn't been upgraded one bit. Literally just the price tag changed.
And it for sure doesn't stop at real estate. Your everyday essentials take a massive hit too. Groceries get dramatically more expensive because, again, you're fighting other millionaires just to buy the same loaf of bread. Gas prices completely soar. And very quickly, that harsh economic truth hits you. Your $1 million is rapidly losing its purchasing power. Now, as most of you already know, this exact phenomenon is inflation. Simply put, it's when you have too much money chasing too few goods. At the end of the day, it's really not about the sheer number of dollars sitting in your bank account. It's about what those dollars can actually buy you out there in the real world. All right, moving right along to section 3, money is not wealth, currency versus value. This kind of forces the ultimate question, right? Why doesn't the Federal Reserve just hit print on unlimited money and solve poverty for good? Well, because simply creating money absolutely does not equal creating wealth. Real wealth is built from the ground up. We're talking about producing actual physical goods, providing valuable services, building businesses, inventing new tech, and fundamentally increasing our human productivity. Those things right there, those are the true engines of a strong economy.
We absolutely have to remember that money itself is not wealth. I mean, you can't eat a $100 bill. Money is literally just a tool. It's this highly efficient medium that we use to exchange our hard-earned value, mostly so we don't have to, barter chickens for a car. Let's look at section 4, the central bank's job, balancing growth and stability. So, if printing money isn't a magic wand, what does a central bank actually do? Well, while the Federal Reserve can't heavily influence the money supply, they can't just conjure up new factories or highly skilled workers out of thin air. And history gives us some incredibly painful lessons about this limitation. Time and time again, when countries create excessive amounts of money without actually matching it to real economic output, it just leads to massive hyperinflation. The tragic result is that everyday people watch their hard-earned savings completely lose their purchasing power. Because of this harsh reality, central banks basically have to walk a tightrope every single day. They have to carefully balance two huge, often conflicting goals. Goal 1 is to keep inflation under control so our money actually retains its value. Goal 2 is to support maximum employment and overall financial stability. It is, without a doubt, an incredibly delicate balancing act. So while the Federal Reserve technically can expand the money supply under specific circumstances, doing so without strict limits would be an absolute disaster. Why? Because printing money simply cannot replace real economic growth. The strongest, most resilient economies on the planet only get richer by producing more real value. Definitely not by firing up the printers and adding a few extra zeros to a computer screen. Since genuine prosperity truly comes down to innovation, hard work, and actual real-world production, it leaves us with one really vital question to ask about the future of any economic policy. Are we building real value, or are we just printing an illusion? Keep that thought right at the front of your mind the next time you hear someone suggest an easy monetary fix. All right, thank you so much for joining me for this explainer. I really hope this helped solidify how money actually functions in our world.